Welcome, everyone. This is once again another segment of Coach Steele's Finance Training. And today we're talking about what is cash on cash return. I like this subject for all of my long-term real estate investors, and people that like to invest their money and put their money to work into different asset classes. Once again, talking about what cash on cash return is a great subject. So what is what I call COCR or COCR, cash on cash return? Well, it says it right here. It is a rate of return often used in real estate transactions that calculates the cash income earned on the cash invested in a property. Put simply, cash on cash return measures the annual return the investor made on the property in relation to the amount of mortgage paid during that same year. It is considered relatively easy to understand and one of the most important real estate ROI calculations. And ROI means return on investment. Let's go deeper. So as we look at this and we talk about cash on cash return, and I'm going to use an example of a long-term rental property. And as you see here in this example, let's say this property that you have here, let's say it's a 2-bedroom, 1-bathroom townhouse. And let's say that tenant right now is paying $1,100 a month for rent. And so we see the gross rent is $1,100 a month, right? Let's keep going. Now, if you purchase the property, let's say you purchased the property for $99,000, and if this is a regular conventional loan that you're doing with this real estate investment, you're probably going to have to put about 20% down. So what you would want to do is look at 99,000 times 0.2, which is 20% times 20, and we see that answer is $19,800. And if you need to pull out a calculator just to practice doing this yourself, feel free to do that as well to check the numbers. If anything's off, feel free to hit me up and say, hey, Coach Steele, these numbers are off, and we'll get it fixed. Also, if you're going to do this, like I said, with a conventional loan, there might be some closing costs. So for this example, we're going to use the closing costs of about $4,000, because when we are trying to find out what our cash on cash return is, we want to find out how much money do we spend out of pocket before we close on this deal, and if there's any repairs that we need to spend money on before we can get this property rented out. The liquidity, the cash that we spend, we need to know all of those numbers up front to find out cash on cash return. Another thing we need to know is what is that mortgage payment, because that's going to play a factor as well. And so in this example, if you put 20% down, then that means the balance on that mortgage is going to be about $79,200. So with that, you have to finance that. If you're going to finance it, then that monthly payment is going to be about $818 a month. And when we look at that $818 a month, we are accounting for principal and interest and the escrow. And escrow is the property tax and insurance. If you had any more repairs or management fees or expenses that you have to pay, we want to factor that in as well. Let's keep going. If you want to know how we came up with that $818 far as the monthly mortgage payment, including principal and interest payment and the escrow, which is property tax and insurance, we'll show you right here. If you buy that property for $99,000, you're putting 20% down. So if you're putting 20% down, that $19,800, it leaves a loan balance of $79,200. If the interest rate is 7.75%, and understand that interest rate is going to be higher because it is an investment property and not a primary home. And let's say it's a 30-year loan term, and the start date, January 2025. Let's say the property tax on this property is $920. There's no PMI because we put at least 20% down. And then the home insurance, let's say it's $2,079 on this townhouse. And what you would do is hit calculate, And when we do that, you see the monthly mortgage payment is $817.32. So what I did was I rounded up to $818 for that monthly payment. And so this is just another calculator that I use to find out what the monthly payments will be on a property, the estimate, the down payments. If I put 20% down, you don't always have to put money down for an investment property. This just shows you some of the other estimates and total interest paid over the term of 30 years. Once again, you do not have to take 30 years to pay off a mortgage. If you have a primary home and you are interested in paying off your mortgage in less than 30 years, potentially 5 to 7 years, then definitely reach out to me. I can give you a free assessment to find out, using the HELOC strategy, if you can pay that mortgage off fast and save yourself thousands of dollars in interest. All right, so now let's get back to the slide. Let's find out what your net income is. When you're trying to find out cash on cash return, one of the main numbers we need to know is, what is your net income? Now, in this property, if it's the gross rent is $1,100 a month, let's say the management fees, the property management team that collects the rent, that also, does, potentially periodic checks throughout the year. Let's say they charge you 8% of the rent to manage this property for you. So then that means we would have to take $1,100 times 8%, and we see that's $88. So out of that $1,100 every month, property management gets $88. And so if we subtract that 88 from the 1,100, we see that is $1,012. So we're bringing that in. That's what we receive from property management if there's, not any monthly repairs or maintenance, plumber or AC guy needs to be called. We're bringing that back. Now, as a landlord or as a homeowner that is renting out that investment property, now you still have to make your mortgage payment every month. So if that estimated mortgage payment to service that loan is $818 a month, what you would do is take what's left from that rent after property management, $1,012 minus $818. That means your monthly profit is $194 every month after taking care of all these other basic bills, expenses, and servicing that loan. Now, 194 times 12 months gives us our net income for the year of $2,328 annual net income. Now that number is important to know, and we're going to need that to find out our cash on cash return. Let's go deeper. Now, we need to find out our total cash invested. What did we have to come out of pocket? How much liquidity cash did we put into this deal? So if the answer is $23,800, it's because we did take $19,800 and we put it down on the property. And so that's 20% of that $99,000. If this property was to be bought for $100,000, then we know this answer would be $20,000. Let's estimate the closing costs are about $4,000. And so with that, you add those two together and total cash invested is $23,800. So we added those together. We know what we have. Now, when you're trying to find out cash on cash return, what we want to do is take the net income, the $2,328, divided by total cash invested, which is the $23,800. When we do that, we get the answer of 0.0978. So when you see that, we now change it into 9.78%. So when you want to find out what your cash on cash return is, we have it here. We are a little over 9.5% on our cash on cash return on our investment of that $23,800. For some people, this may be right where they want to be. For some real estate investors, they may want to make at least 10 to 12% on their investment. So here it's a little short, but I will say this. If someone acquires a property where there is a lot of equity in the property. Let's say they dive into this property, there's $20,000 worth of equity. If they bought it for $99,000, but let's say it's worth, $120,000, $119,000, it's still a win for them because they can turn around, sell it, and walk away with a decent profit. And so if there isn't a lot of equity in the property, some people may decide to pass on this or renegotiate the purchase price. And so those are just a few things that you want to look at. But once again, this is cash on cash return. And we use an example of a long-term real estate deal, long-term real estate investment, long-term rental property. If you have any questions, once again, drop it in the comment section. This is Coach Steele's Finance Training, and I look forward to having another session with you. If there's something else you want to learn or have broken down, feel free to leave it in the comment section, and go check out another video on my YouTube channel, Coach Steele's Finance Training. Subscribe.